pattern. So you will be learning what is a trend reversal pattern, how to make use of a trend reversal pattern for your trade outcome, and how best the trend reversal pattern is. So if you are watching those TV news channels and other things, whenever someone say about the pattern, it generates some fear inside the trader's mind. When someone says that head and shoulder pattern has formed, triple top has formed, triple bottom has formed, so big M pattern has formed, big W pattern has formed. If someone say about this kind of patterns, it generates some fear in the mind of the traders. So do not get afraid with these particular names. This is nothing but, pattern is nothing but the shape, the overall pictorial representation of your price and time graph over a period of time. That is known as your pattern. Pattern gives you specific clue about the future movement of the stock. So it is not a fearful factor at all. And there are many methods to study the stock at price and time movement. There are many methods in 1SD method or in moving average method. So you are implementing some mathematical concepts into it and you are studying those price movements and you are projecting the future price movement through some mathematical equations or through some mathematical formulae. That is one way of understanding the or analyzing the stock price. Because every one of us as a trader is worried about what is going to happen tomorrow, what is going to happen in the next hour, what is going to happen in the next minute. So we always try to scale the future movement of the stock price. So that is our aim. So whenever we make some success, that means we can able to scale the future movement of a stock price perfectly. That time we are getting success. When our future projection went wrong, we are landing at loss. So to get that future projection, to achieve that future projection, or to scale that future projection, we need some methods. We need some rule-based methods which can help us to identify. And here the rule-based methods are very important. Why? The stock price is associated with the number of traders, those who are present. The stock price is also replicates the overall mood of the traders or the overall view of the traders at that particular time. So that time, if millions of traders are associated with one particular counter, how you will know about their mood? You cannot ask each and every individual and say that what you are thinking about Nifty. So you need to follow specific method. So in that journey, in the first week itself, you have learned how you can utilize one standard deviation formula to capture the future expectation of a counter. You have also learned how trend continuation pattern you can utilize. You have also learned how you can utilize the moving averages. So when I talk about these patterns, they are classically divided into two categories. Number one, trend continuation pattern. Number two, trend reversal pattern. So when we talk about trend continuation pattern, if certain formations happened on the chart, then the same formation is going to continue. That is known as your trend continuation pattern. Same formation means the trend, if it is uptrend or while moving up and up or while moving scaling high and high, if the price forms specific view or file gives you specific view like a flag, like a pennant, like a pennant. So if such kind of view is formed on the chart, then we will say that it is a trend continuation pattern. Certain views are there which can classify these things as a trend reversal pattern. Means certain view or certain pictorial representation, if it comes on the chart, then we can say that it is going to be a trend reversal. If the uptrend is going on now, then the same uptrend is going to change. So that is why the name of this pattern is trend reversal pattern. So this is the classic name of a trend continuation and trend reversal pattern. So while forming these patterns, lot of ambiguities are there. If I show you one head and shoulder pattern, this is just a name we have given. Some will say it is a triple top, some will say it is a head and shoulder. Why such a ambiguity? Because last session also I told you, patterns are not being invented by anyone. It is by the trader. It is automatically invented. It is not being invented by anyone. And pattern always has a mathematics behind it. Pattern has a specific geometry behind it. If you do not understand that particular mathematics or geometry, then we will say that no, it is triple top. Someone will just say that no, it is head and shoulder. So whenever we talk about the mathematics of that patterns, in last session I told you the flag pattern requires minimum 8 candles. That candle may be 8 days candle, maybe 8 1 minute candle, maybe 8 5 minute candle, whatever may be, 8 candles should be required. And the trend line what you will draw, it must touch 4 candles high or candles low. Then only it should be considered as a flag pattern. So similar way, the head and shoulder also has a candle rule. Head and shoulder having a timing rule also. So whenever we talk about a head and shoulder pattern, so it look like this: left high, head height and right high, whatever is visible on this graph. So it has a support 1 and support 2. So specific rules are there. Whenever one left head is formed, then the head high is formed, then the right high is formed. So the timing of this event must be, if this has taken 1 hour time to form, this should not take less than 20%. 20% comes to 1 hour is 60 minutes. If you are taking 1 minute candle, if 1 hour is taking to form left high, then the head should not form in less than 20%, which is less than 12 minutes. Less than 12 minutes it should not take. So the timing of this head formation should be more than 12 minutes and it should be less than 60%. So it's greater than, should not cross the 60%. Means 60% of your 1 hour, if I am taking 1 minute, so 60% comes to 36 minutes. So if left side of your head and shoulder pattern formed with a time of 1 hour, then the head should not form in less than 12 minute time and it should not take more than 36 minutes. That is the first rule. Whenever this head is generating this is support 2, support 1 and support 2, the support 2 must not be less by support 1. So support 1, whatever x value you are forming this particular support, the support 2 must not be lesser by 30% from this support 1. If support 1 is x, support 2 should not be x minus 30% of x. So that is also a rule, you have to fix it. Then you can say that this head formation has become successfully. Then you have a right hand side formation, it also obeys the same rule as the left shoulder. So left hand side, whatever the time it has taken, right hand side should take that much of time to form the right shoulder. So timing of left and right shoulder formation should be same. Timing of head formation should not be less than 20%, should not be greater than 60%. That is the finest rule for this one. So this is how you should understand this head and shoulder. If it violates this timing protocol of less than 20% and greater than 60%, then instead of reading it as a head and shoulder, you have to read it as a triple top. Provided this left high and the head high should not have a difference of more than 30%. Left high and head high should not having a difference of 30%. So this is how you should understand a pattern. So once you are understanding this pattern, then the next question is when the pattern is going to give me a breakout. Breakout means the trend reversal point. Means that the trend, these are all three things is happened in an uptrend and a downtrend. Combination of uptrend and downtrend. Here one uptrend has happened, if you see. Then there is a followed with one downtrend, then again one uptrend, followed with one downtrend, again one uptrend. So three uptrends has happened. Same way three downtrends has also happened. So this is a mix. All this head and shoulder formation happened equally as a uptrend, combination of uptrend and a downtrend. So now question comes, if such a formation comes, then we should say that suspect that this trend is going to change. Means now from here it is going to be a downtrend if it meets specific protocol. What is that protocol? We have to go for a breakout point. So once this breakout point we are identifying pattern breakout, fall below support 2, means in the third attempt of your fall, if it is falling below support 2, you can say pattern breakout happened. If the pattern breakout happen, then target will be pattern breakout minus head height. This is what the pattern's arithmetic is. So this is how you should learn the patterns. This is how you should learn the pattern, then only pattern will work. So while using pattern as a study to identify specific trend or specific objective of your future projection, it is a visualization process, and something will come from your learning process while evaluating on patterns, something will come from your experience. So these two components will be always be there. So this head and shoulder formation is a frequent formation, like that last time also I have told you. Some are the documented patterns are there, some are undocumented. Like 30 patterns are there which are documented, 30 to 35 patterns are there, documented patterns. It is written in many books and all. Many patterns has come which is undocumented. Somebody has experienced it and he has put in some books and literatures. Recently today I was going through one web search, I found out one Adam pattern is there. So that I have never heard. So it is being put in many, some author has come with his specific formations on that, and he has given some mathematical validation on that. However, trusting on this 30 to 35 pattern is more important. And out of these 35 patterns, whatever you are seeing, all patterns are not frequent patterns. So they are not frequently occurring on the chart. Like you have a diamond formation, like you have a spring formation. So these are the formations very rarely occur. However, flag pattern, pennant, head and shoulder, these are the very frequent pattern. And all patterns also not useful for intraday trade. Similar way, all patterns also is not useful for long-term trend forecast. Flag pattern is not suitable for your long-term trend forecast. Pennant is not suitable for your intraday patterns. Similar way, head and shoulder, though it is a frequent formation, however, it is not suitable for the intraday. If you are going for a weekly or monthly projections, it may be suitable. But some people say that yes, head and shoulder also works in intraday. But to my experience, it says that it more works if your timing is more. Similar way, the very frequent pattern like head and shoulder, which inverted head and shoulder also is another pattern is there. So like the very frequent pattern which works on the intraday, trend reversal patterns, big M and big W pattern, many are there. So it is out of that 35, this is one pattern. So out of this 35, these are all one patterns. So simple web search itself, you can get to know that what is the 35 patterns available. So here, whenever I talk about this big M and big W pattern, it happens a formation like a W, or M is also having a formation of a M. So here I'll just take you to this big W pattern. It has a high, then it will fall, then create a further high, then it will create a fall, and that fall will create a low which is lower than the previous low. Then it is having a move upward. This is a bearish trend reversal pattern, means previously the trend was bearish, now the trend is going to be bullish trend, or the trend is going to change from bearish to bullish. This is called your big W pattern, bearish trend reversal pattern. Similar way, the bullish trend reversal pattern is known as your big M. So here specific protocols are being followed for forming these particular patterns. What is that? Here whenever this pattern is being formed, first you need to look into the first part of this pattern formation. When this high has formed and when this D has formed, whether they followed any Fibonacci proportion, whether it is from the Fibonacci retracement 0 it has started and it is going to 1.618 retracement, or 1.236 retracement, or 0.786 retracement, or 0.618 retracement, whether any Fibonacci proportion is being followed from A to D. If so, then the next high will also follow a Fibonacci proportion. Then the next low also will form a Fibonacci proportion. Then the next also will follow a Fibonacci proportion. That is the first thing you have to investigate. Whether the fall from A to D followed any Fibonacci proportion. Then if it follows, then you have to sincerely follow the Fibonacci to find out. Similar argument holds good for GAN. Similar argument holds good for India. If this fall from A to D completes say 1, 2, 3, 4, 5 wave, then from D to B also will be forming a 1, 2, 3, 4, 5 wave. From B to E also will form a 1, 2, 3, 4, 5 wave. If this fall from A to D follows a ABC pattern, then from D to B also will be a ABC, B to E also will be a ABC, E to C also will be a ABC. So this is the first investigation you have to do. Suppose if you do not have an understanding on those those things, then you must follow the pattern's original rule. Original rule in the sense, if A to D it has taken X time, how much time it has taken to form A to D, then from D to A should not take more than 3x time. If it has taken 1 hour, this D to E should not take 3 hours. If this has taken 10 minutes, this should not take 30 minutes. So within 30 minutes or the next 30 minutes, this should be completed. Once this is being completed, then your last leg, this will be a success, or else it will become a failure. Once this success happens, you should see that this C, the height of the C, first will find a resistance at the high of A. Wherever A has started, that high you will find a maximum resistance. If that resistance was successfully penetrated, then whatever the height you have A to D you have got, from A you have fallen to D, how many price points you have fallen, that price points you have to add with the price A, then this will be your optimum targets you can get. And here pattern breakout also nothing but your A. A is your pattern breakout. So this is the pattern's original rule. What is the modifications we have brought in our study? We have told that if any of the patterns leg, this is all are the patterns one wing or leg, any of the pattern leg is followed any method, either Fibonacci or Gann or Elliott, then other legs also will follow the same rule of Fibonacci and Elliott and Gann. So this is one of the easiest pattern, and very frequently it happens on your chart. Very frequently it happens. If you little observe in your chart, in a day itself 2 to 3 times you will find out. Whenever there will be a volatile day, you may find many things. But whenever there is a trending day, whenever the trend started moving up, taking a pause, then again moving up, on those trending days you may not observe these particular patterns. However, in the more volatile days, you will observe these patterns, and these patterns used to be very successful on those days. So before moving to the next part of my trend reversal, pattern which say the future trend will change after a breakout, pattern which say trend is already changed, the trend is already changed. So what is your view? How many of you say that? How many of you understand the term trend reversal pattern in this context, the pattern which say future trend will change? How many of you understand that pattern which say future trend will change after a breakout? How many of you say pattern which say trend is already changed? So what is the meaning of a trend reversal pattern you derived from my lecture? All must give the answer. All these 4 to 5 concepts we are going to learn. First, today we are learning the trend reversal pattern and its arithmetic. Tomorrow we will be learning on indicators. Day after tomorrow, candle patterns, candlestick patterns, key patterns which we can utilize. And again we will be learning how we can learn the Fibonacci or utilize Fibonacci for our BTST decisions or for our investment decisions, and that will also guide us that when as per Fibonacci pattern we should trade and when we should not trade. So participate in this survey and give your view on trend reversal pattern. So I am closing this thing. 84% of the people out of 174 people have participated. So I am sharing this survey. So 31% of the people say 86% of the people have voted in this. So those who have given pattern which say future trend will change after a breakout, they are most accurate in understanding the meaning of trend reversal pattern. Trend reversal pattern doesn't say that trend is already changed. Future trend will change, that also it doesn't say. This says that trend will change after a breakout. So more appropriate. So 55% of the people has given their exact view on this particular thing. So fine, moving to the next part of our, they have used it. So it is not new. So those who have not used, also you can see 43% of the people, those who are present in out of this 176 people currently, has used this particular patterns in their studies, in their decision process. 57% people never used. That is a different issue. However, still people are there, those who have utilized this particular pattern in their decision process. So pattern, the main objective of this big M pattern, same as your big W pattern. It holds the same logic also like your big W pattern. But one small difference is here. The difference is when this low is being formed, this is the lowest low, then this is one minor low will be there. And this low, which will be at a point E, this low. So this will be lower than this one. Sorry, this will be higher than the point C low. And it will pause a while here. It will pause a while here. Pause a while here. And maybe it will give you a formation of a flag, bearish flag pattern, bearish flag pattern. So, or a pennant. So in this point, one particular formation it will give. Post that only you should confirm that yes, it is going to be a big man pattern. And same logic here. If any of these wings before you have 3 events already happened, or before while estimating this particular pattern, most of the events would have happened, or only 2 legs would have happened, or 3 legs would have happened. So you have to observe whether these 3 legs, imagine you are observing, it has not become only 3 such formations you are getting, whether these 3 formations has given any Fibonacci, obeyed any Fibonacci ratio, whether these 3 formations has obeyed any of the Gann's principle, Gann's resistance and support level, whether these 3 happenings, already happened things, has given you any Elliott formations, Elliott waves formation like 1, 2, 3, 4, 5 wave or ABC or any of the Elliott pattern, then you must say that other one also will follow the same thing. But one thing you have to very carefully you have to remember, there is no point in looking at a pattern after it forms the entire M. Once the entire M is formed, then what you can do? Nothing is, no opportunity is present in your hand. No opportunity is present in your hand because all opportunities are gone. All opportunities are become past. All opportunities are over. You have to presume and take this pattern when this pattern is partially happened and intact. Then only you can take the maximum benefit of the pattern. So whenever forming this, whenever seeing this head and shoulder pattern, if you are saying that okay, now I'll look into this, left head formed, right also has formed, right has formed. So you have limitedly you can participate in that. Means you have to find out a breakout. If breakout happens, then you will get some targets here. But this is not an intraday pattern, so it is okay. However, whenever you are looking at a flag pattern, looking at a big M pattern, looking at a big W pattern, so you should not wait for the entire event to over. You should not wait for the entire pattern to form and end. Then only I should participate. Not like that. If you do that, then this may not give you much profit or anticipated profit. This also you have to remember very carefully. So if it doesn't follow any of the Fibonacci, Gann or Elliott rule, so it has its own arithmetic. So before giving a summary of this event, I'll just couple of seconds I'll take to explain our product. Smart Finance, as all of you know, 10 to 11 products we are having. This particular concept, what you are learning on patterns, what you are going to learn on moving average oscillators and everything, it comes under our technical course. So besides that, the 1SD formulas, the volatility concepts, the dynamic Fibonacci, Elliott, all those concepts, whatever you are observing, that is programmed in our Smart IT software. So if you are going to buy all these things separately, it will cost you some 47,000 and odd. If you are taking as a basket, 6 books, near about 17 DVDs, all our softwares, it is costing you 17,500. So this is the price which is present now, so it may change in future. So any query related to the product, you can call to our sales number. So sales number 98403 48971 or 04464995823. So all your queries associated with the concept what you are learning now, you can post it to by email. So telephonically we may not be in a position to explain this concept of 1SD, concept of moving average, concept of these patterns. However, since you are joining a event, you are learning certain concepts, so it is obvious that you may get some doubts. So post your queries to our email. So you will get our email IDs from our website. So once you visit our website smartfinancing.com, so there if you click on the contact us link, so here you will get our email IDs. You can send your queries to any of our email IDs. So those and weekly nifty levels we are posting in the Facebook, Twitter. You can be follow us in that, so you can get those weekly nifty levels there. Recordings, if quality of the recording comes good, we are sharing in the YouTube. Visit our YouTube here, so you can get the access to those recordings. So besides that, many articles, many videos are present in the site. If you find time and if you find it is interesting and beneficial, then start reading those things. So before ending this session, I will just